Hi, this is Acme with the US stock highlights here on Share Talk for Thursday, the 17th of December. Starting off with Amst or Amst. Here we've got well, it's hopefully the start of a nice move to the upside. We had the gap there in the mid-November after a bear trap below $4. So that was sort of tick number one. They've broken this line of resistance from September after several days nesting on the 50-day moving average. That's the blue line there at $4.56. So basically above this broken line from September at $5.06. Looking for a follow through on the upside up as high as an estimated $8 target, hopefully by the end of next month. If you're cautious on the bull argument, maybe you'd wait for an end of day close through that peak of $5.37 at the beginning of December. But it looks like that trend line break, and even actually the several days bouncing off the 50-day line have really started Amst's move to the upside. On to a stock which is new to me and probably is new to you as well. We've got Eols with a break through or a gap through the 200-day moving average. Again, one of those situations where we got several days of bouncing off the 200-day moving rather the 50-day moving average late November and early December. That's a plus. Also a nice little flush out yesterday with the bear trap down towards the $3 area, but still a higher low, and then the gap. So in fact, you could actually say that the bear trap and then the gap were actually the signal for this stock Eols to go higher. And the view now is that while we're above, at least while we're above the 200-day moving average at $4.06, on an end of day close basis, we could head up towards the top of the rising March trend channel at $7 plus over the next 1 to 2 months. I suppose if you want to give this a bit of wiggle room, you'd have the stop loss there at $3.70, which is the July support line, but really above $4.06 and the 200-day line and the gap, we should be heading higher. Next up, a stock which is looking encouraging as well, Jupw Wellness, another one where there's not much charting data, but in fact that can actually tend to work in one's favor rather than against us. Here we've had this break of neckline resistance and break of that resistance line there from the end of October at $5.07, and above that, above $5.07, looking for up towards $12 over the next 1 to 2 months. A weekly close tomorrow above the peak there at $5.86 at the end of November would be an extra boost for the bull argument, and obviously so would an end of day close through November resistance at $7 as well. But I'm really going by the break of that trend line there around $5.20, which was the late October resistance line. Next up, a stock which was requested yesterday and did rather well yesterday. It's now done even better today. So full marks for the person who requested the stock. As it was actually a stock which we covered here before, but the timing was perfect yesterday with the gap higher through $8. Today we've had a gap through $9 and actually peaking through $10.45. Still looking for up to $14, which was is the top of the channel there from earlier in the summer, and that could be hit hopefully as soon as the end of next month, especially while there's no end of day close back below the latest gap with yesterday's intraday high at $8.85. So above $8.85, still looking, or now looking, for $14 for Marathon Patent Group. Next up, a stock which is probably the star of the day in terms of performance, or it was when I picked this out earlier on. Here we've got Nxtd, and the attraction here, and I think I covered this yesterday actually, was that while we were above the initial December peak at 69 cents, we could head towards $1. In fact, what we managed to do is not only hit $1, which we did at the end by the end of yesterday's during yesterday's session, but we've hit $2, which was the next target I was going for, which was a November 2018 resistance line projection. So currently we're sort of left scrambling for a fresh target, and above 2, probably up towards the $3 or $2, I suppose $2.90 area would be the parallel on the previous resistance lines, but basically August 2018 resistance line projection heading towards $2.90 is what we're looking for here. Upside, I suppose, is valid at least while we hold above the resistance on the way down, which in this case was around the $1.40 area. So while there's no end of day close back below $1.40, revisit $2 and then possibly as high as $2.80 or 90 over the next 1 to 2 months for Nxtd. Stock which I covered quite a few times, I think in November, but shares cooled off a bit. Here we're going to have to see whether it's going to come through at the moment. But Naked Brand Group, here we've got a situation where it looked as though the shares would head quite directly higher earlier this month, but in fact what they've done is that they've stalled a bit, and we'll see why they've stalled, basically to test the area of the 50-day moving average. That's currently around the around the 13 cents area. While we're above that, then we'll hopefully heading higher towards the 40 to 45 cents area, which is the area of the 200-day moving average. And if we're lucky, we'll avoid even trading below 15 pence, which is basically a former line of resistance from the middle of last month. But the latest trend line breaking 16 cents really suggests that we could be back on track for the 40 cents area while we remain above 13 cents. So hopefully the 50-day line there will remain unbroken. On to Rite Aid, and here you can see that there's been a gap to the upside today. Again, this rally started, I suppose, with those multiple days resting on the 50-day moving average, which I have to say has become my favorite signal of the year. I think this is sort of a newly discovered or newly remembered one, maybe from many years back, but many days or several days resting on the 50-day line tends to be precursor to a move to the upside, and that's what we had here for Rite Aid. Gapped up again today, and while we're above yesterday's floor at $17.07, looking towards the top of the rising trend channel from September, currently pointing towards $28 plus, and only really back below $15. The floor of the September channel really delaying the upside scenario for Rite Aid. Just a couple of situations to go now. First one is Seneca Biopharma. Here you can see that the shares have gapped up higher today within, well, it's a breaking neckline resistance, the initial December resistance there at 86 cents. And if we can get an end of day close or a weekly close above that, we're looking towards the top of a rising trend channel from July, currently pointing up to $1.60. Only back below, I suppose, the 70 cents area and the area near the 50-day moving average, the blue line there, really delaying the upside scenario. I think we've done enough here, especially after, again, those multiple test points on the 50-day moving average to head higher and stay higher. Although I have to say that there was a full storm move. There have been full storm moves over the recent past, but of course, in this situation, we've got the 50-day moving average either flat or rising, whereas before it was falling. So that signal did work in theory. Finishing off today with Xspa Group, which I see that I did cover before in the summer. There was a little bit of a move to the upside from around, $3.30 to $4.30 or so, but we fizzled out. Current situation here is not looking great. Basically need to hold above that initial December support there at around the $1.34 level. While we're above that, then we've got a notional attempt or a notional possibility of the shares recovering, i.e. bouncing off the floor of this falling wedge from back in October. But basically we need to hold $1.34 on an end-of-day close basis, and ideally have an end-of-day close breaking that October resistance line at $1.50 in order to open up the possibility of a retest of the $2 or even $2.50 area. That's it for me today. More updates tomorrow.